rocky flat. Hello, everyone. Good morning, happy new week to you all, and good afternoon, good evening to you, depending on whichever part of the world you are tuning in from. Is it appropriate for me to say Happy New Month one more time? We already said that last week. Happy New Month to you guys. For those of you who are actually joining me for the first time, and probably for the first time in recent times. So I'm so excited to welcome you all to yet another promising edition of my Forex Morning Mastery, where we usually dedicate it into price action based technical analysis and, of course, follow up details to my weekend videos. My own name is Sheriff Daramola, and for the next 30 to 40 minutes, depending on how long this will take us, I'm going to be your host as I will be taking you on a trading journey where we shall be delving into the current market structure, looking at things from a technical standpoint, and of course, using our fundamental tools such as trend lines, key levels, and of course, chart patterns to unravel the potential trajectory for today's trading session. Well, it has been a very interesting, in fact, surprising and interesting development in the geopolitical um, uh, situation in recent times. It's just over the night we just had the news of an attack on the U.S. vessels and warship at the on the Red Sea. This happened overnight, which has already incited some ripple in the market, and in fact, we've seen how price action did some couple of whipsaws on all major assets that we have been monitoring. So we are going to be looking at how this the latest development is going to be affecting the market, and of course see how market participants will be reacting to this event. Um, for this new week, we are going to be monitoring three financial assets just as we usually do, which includes the US All Spot, the GBPUSD, and finally the XAUUSD, which is popularly known as the gold spot. So during the course of the weekend, I was able to share publicly my analysis on the XAUUSD and the GBPUSD. Since I didn't do anything on the US All Sport, so today you will be seeing how we will be looking at the higher time frame to decipher how we will be positioning ourselves for today on the US All Sport. So I encourage you to stay tuned in, stay with me, as you do not want to miss out on any of the valuable insights and ideas we will be talking about today. Um, for those of you who are joining me for the first time, you are highly welcome. I didn't forget you guys at all. I know you will be wondering what this is all about. What is it that we do here? Well, as technical traders, we usually gather here every day to come together as a community and engage in follow ups and reviews of our current positions in preparation of both the London and the New York session. Usually, the session officially kickstarts 8:05 a.m. UTC, 9:05 a.m. West African time, and I recommend you to stay tuned in so you don't miss out on the valuable information we will be talking about. Now, what is my purpose here? My aim is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with me, the better you will become at comprehending our analytical approach and utilizing the information gathered here to make your own trading decisions and strategies. So, once again, I welcome you on board, and I, in fact, encourage you to engage in the comment section, as the more questions and involvement you have here, the better it is for you. So, with that being said here, let's dive right into the business. But before I do, I can see a handful of comments. Let me just run through the comments here. Simon Bayoni, I see you all over the place. Good morning to you. Glad to have you around with us this morning. Krishna Veni, good morning to you too. I saw Road to Freedom. Is it freedom or freedom? Maybe that's what you're trying to say there. Morning, I really want to see your view on GBPUSD because the market has been moving rapidly. Of course, we are going to be looking at that, and I do hope you watch my weekend videos on the GBPUSD, as this will be giving you a background knowledge of what we are going to be talking about today. All right, Torres Master, good morning to you. Around I hope we don't get infectious here. All right, thank you very much. Hello, Sheriff Abdul Kadri, my namesake. Good morning to you, and glad to have you around with us this morning. And I do hope everyone had a wonderful weekend. So, with that being said, here, let's dive right into the business. And as usual, you know how we do it. The first thing we normally do is to check on the economic calendar. And for those of you who have been with me for a while now, you know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movement. Now, by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential opportunity prior, during, and even after these economic events. Now, for this week, and based on the asset we are looking at, we will be focusing on both the United States and the United Kingdom economic docket. Now, if you look through, and in fact, if you had watched my videos during the weekend on how we are planning for the week, you will see that we really do not have any high impactful event for this week from the United Kingdom. So it's going to be more of the United States here, and let's see if the United States economic features can bring in catalysts that will drive a positive traction in favor of the US dollar. So for today, Monday, December 4th, we do not have any high impact events. So what I did here was to take it a step further to include the medium impact event. At least it will give us an insight into how participants in the market will be anticipating this event, which of course is a sentiment which will reflect on the chart as price action. So now the first one we are going to be looking at today is coming up in about 7 hours from now, and it's from the United States. It's a medium impactful event, and it's called the factory orders month for October. Now, for those of us who don't know what the factory order is, well, this is a data released by the United States Census Bureau on a monthly basis, and in fact, it measures the change in the value of new purchased orders of manufacturers' goods at United States factories. Now, the data, which isn't adjusted for inflation, is published in monthly report on manufacturer sentiment. Now, of course, this will give us and it serves as an indicator that hints at the demand ahead for manufacturing goods, and thus can be indicative of future production levels. Now, generally speaking, a high reading is considered as bullish and positive for the US dollar, while a low reading is seen as bearish. Now, let's look at the figures we are looking at here. Now, for the previous month, that is for the month of September, we saw an expansion of about 2.8%, and we have economists projecting a deficit of 2.5% for the month of October, which is not looking very promising at all. So what this simply means is that economists are projecting a contraction in that sector, which if that is going to be the case, then we are likely going to be seeing further decline in the US dollar. However, we don't know what the actual figure is going to be like. So we are going to be looking forward to that one to see if it's going to come in just as expected, below expectations, or even beyond expectations. However, as technical traders, our duty here is to try to understand the psychology of price movement ahead of this event. Can we have patterns? Can we have structures that we can use to strategically position ourselves before this event happens? So with that being said here, let's dive right into the chart and let's look at things from a technical standpoint. Now, the first asset we are going to be taking for today, as usual, will be the US Oil Spot. And in fact, we're beginning to notice some interesting development on this current chart from a technical standpoint. However, it is important that before I go into the technical details, that we do understand and familiarize ourselves with the geopolitical factors, fundamental and economic factors that are driving the price of the US oil so far. Now, one of the things that was the major headline for last week was the OPEC Plus meeting, which happened on Thursday and Friday, and we saw how they reached an agreement for voluntary output cuts in the first quarter of 2024, and this resulted in an uproar in the market, as majority of the investors were not really happy about this, and this led into a downward trajectory of price of the oil in that regard. Then there's another thing that is happening within the OPEC Plus member, which raised some questions and concerns as regards to the unity amongst the members of this organization, as we have 23 members, I think. At the last time I checked, it's 23 members, and they have to distribute this production reductions amongst themselves, and this is causing a little bit of tension within, which of course has also made investors not to feel convincing that this oil cut in production of oil will likely be making an impact in the market. So majority are still not very confident in that regard, which may likely incite some further selling opportunities in this particular market. Then another compounding situation that is going on has to do with the mixed economic data from the Chinese economy. Remember, the Chinese economy is the largest importer of oil in the world, and if the economy is not doing pretty well, what this simply means is that there will likely be a cut in demand. And when there is a cut in demand, definitely supply increases, and that also incites some bearish situations in the market. And this current situation is contributing to the complexity of the current market dynamics on the US oil spot. Then finally, we had yesterday over the night that there was a recent attack on an American warship and the commercial vessels in the Red Sea, and this has heightened some concerns about escalating conflict between Israel and Hamas, and the resultant fear of potential supply disruptions in the Middle East introduces a counterbalancing force limiting the downside of the US oil. So if this tension increases, then there is likely going to be a disruption in oil supply, and when there is disruption in oil supply, demand increases because supply has dropped, and when demand increases, price is expected to rise. So we are caught up within an ambiguous situation right now, where we have a tendency that could incite price to the downside, and of course we have the situation that could incite price to the upside. So everyone right now is going to remain vigilant about the geopolitical tensions in the Middle East, as developments in this region will continue to play a pivotal role in shaping the market sentiment in this environment we are in. So now, with the understanding of the psychology behind the price movement of this asset, now let's go deep into the technical structures to see how we can strategically position ourselves for today's trading session. Now, the first thing we are going to be doing today is to run through the higher time frame. So what I did here was to take into consideration the 4 hours time frame, and on the 4 hours time frame, I looked at the nature of price action in the last 6, 7, 8 weeks. That's about a month and a half, and it is quite clear that price action has been very, very bearish. And as you will see here, if we connect the series of lower highs, you will see that we have a beautiful descending trend line. In fact, I have a couple of them here which has supported the bearish momentum since mid-month of October. Now, this is the second one right here, but the major one which we will be using is this one, which is closer to where the trading activity is at this point in time. Now, in addition to these descending trend lines, are a couple of key levels which emphasize the nature of price action in the last 1 month. As you will see, price action has been confined within a range that is between the $79.60 level and the $72.35 area, which happens to be the lowest point price action has been, as you will see, and this further emphasized the level of indecision going on at this point in time. Now, amidst the levels I've identified on the 4 hours time frame, the most important one is the psychological level around the $75 area. Now, for those of you who have been following me on the USOILSPOT since last week, you will see that this same level still remains the level that we are going to be using for this week. And what this simply means is that we want to be seeing how market participant will react to this level to decide if we are going to be buying or selling. And from a technical standpoint, you know how we use our key levels in this community. As long as price remains above the key level, we look out for patterns and structures that supports the idea of buying. And if price action drops below the key level, we look out for patterns and structures that supports the idea of selling. And another interesting thing about the key level is the fact that it also shares a beautiful confluence with the descending trend line we identified earlier. Now, look at what happened here last week, Friday. Excuse me. We saw how price broke down the key level and, of course, the descending trend line coming back into the seller's territory. In fact, price came back to retest the structure, as you will see here during the early hours of today, to incite this bearish momentum that is currently running at this point in time. And I want you to not forget the fact that this key level had played a major role as a buy zone for participants in this market in the past, as you will see here. And now the price has broken down that level, the next target support line is the $72.35 area, which happens to be the lowest point price action has been in recent times. Now, with the situation we have here, and with the bearish momentum continuing to the downside, the question is, will price get into the $72.35 level? Will it get there? Or are we going to see price break down the structure to the downside to incite more selling opportunities? Or will it get here and then probably retrace back to the upside just like it did in the month of November, as you will see here? Now, with the information we have gathered here, we want to be scaling down into the 1 hour time frame so that we can have a better understanding of how market participants are reacting to this current structure since the beginning of this week. Now, to do this, we scale down into the 1 hour time frame, and right here on the 1 hour time frame, this was what I was able to come up with. Now, since I already have a sell position triggered right now, as price just broke down that support line I just identified here. Now, how did I get that? Now, the week started on a very strong bearish note as we saw this bearish impulsive leg pushing price from the $74.75 level right into the $73.50 level during the Asian session, and we saw how buy pressure resumed around this area, and this lasted for about 3 to 4 hours, and we saw how buyers couldn't maintain their stance and sellers broke through that structure. Now, with a range between the $74.75 level and the $73.50 area, you know how we use our ranges when we identify them on the chart. We exercise patience and wait for either the breakdown of the range to give us an opportunity to sell or the breakout of the range to give us an opportunity to buy. Now, with my sell stop order placed below the $72.35 level, I already have a sell position triggered, and let's see if price will get to as far as the $72.35 level, which happens to be the lowest point in recent times, and that will likely dovetail to about 110 to 115 pips thereabout. Now, depending on how price will now react, if it gets to the $72.35 level, will now determine if we are going to be adding more sell positions to the existing trade if it breaks down and retests the structure to the downside, or we might likely be seeing some reversal pattern resume just like it did in the month of November to incite another uptrend move. Now, depending on what happens there, we'll decide what our next line of action will be. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates on how we are going to be managing this position. So at this point in time, price just broke down to $73.35 level. Let's see how this will play out. And one thing I would like to emphasize here is that these are just testing water trades, as the week is still very, very early. Let's see how the market will react. And even if it doesn't move as expected and we get taken out, the week is still very early. We still have enough time to recoup whatever loss we incur if this failed at this point in time. So at this point, we remain bearish, and the only condition that I want to be looking out for buying opportunity here is for price to break out of that area around our key level, which is at the $75 area, and the resistant line of that range, which was where price action started this week. So let's see how this will play out. The only condition here is for me to buy above the breakout of this zone. However, if it so happens that we are able to identify some bullish buildup, that is, price does not just break out like that with an engulfing candle, and then we probably will see some series of higher highs and higher lows within this range, then we could look out for strategic levels to join a bullish opportunity. So I will let you know if that comes up on my TradingView and Telegram platform. So this is my simple view on the US Oil Spot for today. So let's mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So if you have any questions and you need some further clarifications, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, after which we move on to the next asset on our watch list. All right, I see your comment here, Torres Master, saying that shift the screen, bearing the welcome December to the left bottom of the screen. Okay, no problem. I know what to do about that. I'll make sure that the datas are not following through with that area. Okay, I'll find my way around that. All right, thank you very much. All right, so okay, I see a comment here from Road to Freedom. I have never traded oil because I thought it will be choppy. Okay, all right. So you're maintaining your opinion, or you're changing your opinion about oil. And one thing I usually tell my clients is that if you are not feeling comfortable psychologically with a particular asset, it's very, very important that you just stay clear of it. If you are not feeling comfortable with a particular asset, just stay clear of it, as it will affect your managing of affect your psychology while managing that trade. So that is my advice there. So if you don't feel comfortable, stay clear of it. Continue to be part of our session. Keep on watching, and when you're watching our analysis and you see how we take advantage of trading opportunities, maybe with time you get accustomed to it, and when your mind acclimatizes with the psychology behind price movement on this asset, then you can probably start considering trading it. But for now, stay clear of it and wait till you get used to the nature of price action in this environment. Okay, all right, no problem. Okay, in the absence of no further questions, I want to assume that we are all on the same page, and in that regard, let's move right in to the next asset on our watch list. So the next asset we are going to be looking at the moment is going to be the GBPUSD, popularly known as the cable market. And in fact, we have quite an interesting situation going on right now. Remember, last week we had the privilege of capitalizing on some interesting bullish opportunities, giving us over 400 to 450 pips in profit across the multiple entries we had last week. And in fact, we saw how price came into the 1.27100 area, a level which has been a major or a key determinant of price action in the last 7 to 8 months after we noticed it on the higher time frame. So I would like to reiterate here again that for those of us who had not watched my video on the GBPUSD, that my weekend videos, you need to watch that video so you can see how we were able to identify this key level that is going to be playing a major role in guiding our trading decisions for this week. The links are right in the description box of this current video, so if you have in any way missed out on those videos, you can check the links in the description box of this current video to catch up with them. So with that being said here, let's look at what is going on in this market from a fundamental perspective, and then we go into the details of what we expect for today. Now, if you look at what is going on across the major assets, it is quite clear that the US dollar is struggling at this point in time. Now, this has also affected the positive traction in favor of the GBPUSD. And in fact, in the early hours of the new week, we saw how we saw a whipsaw movement in price action. Price broke out the key level a little bit, as you will see here, broke it out a little bit, but did not close above it. Then hit a new high around the 1.27250 area, which happens to be the highest point price action has been for this week, before we saw that sharp decline to the downside during the Asian session. And I'm of the opinion that this happened during after the breaking news of the attack on the US vessels and warship on the Red Sea, and the market reacted negatively in that regard, a little bit in favor of the US dollar. But at this point in time, we begin to notice some consolidation phase. Now, another thing that is also affecting this whipsaw is the recent uptick in the US Treasury bond yields. We saw a recent uptick as we saw probably in reaction to the event. We never can tell yet, but we saw that there was an uptick in the US Treasury bond yields, and we know how the US Treasury bond yields is directly proportional to the movement of the US dollar. So we will continue to see how the market will react to this current structure to decide what our next line of action will be. Then another thing we want to take note of is the fact that this week is devoid of any major key event from the United Kingdom economic calendar. So this week is laced with a lot of US economic features. In fact, we have major ones like the NFP data, which is coming up later in the week, which has a tendency of influencing the market sentiment ahead of this event. Now, from a technical standpoint, how do we intend to capitalize on any trading opportunities here? Now, for those of you who watched my video during the weekend on the GBPUSD, remember that we had an ascending trend line identified on the higher time frame. The ascending channel identified on the higher time frame, which emphasized the strength of the buyers in this particular market. Now, the support line of this ascending channel is very visible here on the 1 hour time frame. Now that price is back close to that area, we do want to see how the market will react to that level. Are we going to see a situation where the support line of the ascending channel identified on the higher time frame will be broken to the downside? If this happens, this could incite some momentum shift, pushing price further to the downside. However, if we see buy pressure resume around the support line, it is of course expected that when price comes into the support line, we expect price to climb up again. Now, in addition to the support line is this beautiful range that you will see price action has been confined within since the beginning of this week. So price has been confined within the 1.27250 level and the 1.26680 area. Now, price is still around our key level at the 1.271 area. So you know how we do it in this community. Whenever we identify a range like this, we want to exercise patience and wait for either the breakout of the range to give us an opportunity to buy, or the breakdown of the range to give us an opportunity to sell. Now, for the fact that price action still remains within the ascending channel we identify on the higher time frame, it makes quite a lot of sense that we look out for buying opportunities. Now, I made mention in my commentary this morning that we do want to see how the market is going to be reacting to the support line of this range, which interestingly shares a confluence with that support line of the ascending channel we identified on the higher time frame. Now, are we going to see price break down both the support line of this range? We might likely see some consolidation phase happen before the breakdown retest happens. If this is going to be the case, then we will be looking out for selling opportunities below the 1.26680 area. So we still remain very patient here. We're at a very crucial point where price action is around the support line of both the ascending channel and the range we just identified here on the 1 hour time frame. Now, depending on what happens here, we'll now decide what we will be doing. Now, if price action continues to find buy pressure around this area, that is, sellers are finding it difficult to settle below the support line, and this reflects on the charts like something like this, leading to the breakout of the 1.26840 area, I do want to be having a buy position. Now, why is that? Look at this area. This area had been a strong selling niche ever since that engulfing bearish candle brought price action to the lowest point it is right now for this week. Now, the continued selling pressure here tells us that sellers are very strong around that area. Now, if we continue to see buy pressure around this area right here, leading to the breakout of the 1.26840, I want to be buying before the breakout of the key level and the resistance line of that range happens. So I want to be looking out for buying opportunities above, and if it becomes more convincing, breaking out of the key level and the resistance line, we had more buy positions to our existing trade. However, if buyers continue to struggle and sellers continue to gather momentum through the course of the day and leads into a situation where buyers are unable to climb back above the 1.2680 area, we will be joining a decline to the downside. So let's see how the market will play out here. It might take about 3, 4, 5 hours before something tangible comes up around this area. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So this is my simple view on the GBPUSD for today. So I encourage us all to mark out this level and this support line of the ascending channel we identified on the higher time frame, as they are going to be playing a major role in determining how we will be positioning ourselves for the next move. If you have any questions whatsoever, feel free to let me know in the comment section. As usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, after which we move on to the last asset on our watch list for today's trading session. All right. So, in the absence of no questions, I want to assume that we are all on the same page, and in that regard, I am permitted to move on to the next asset on our watch list. Okay, I think I saw a comment here coming in from Torres Master. I am a fan of GBPUSD, but I haven't gotten any tangible profits in it. How can I reach you? You can send me a mail. Send me a mail. I have my email address right in the description box below. Send me a mail, and let's see how we can work together. All right. So, in the absence of no further questions, let's move on to the last asset on our watch list for today. So the next asset on our watch list is my favorite asset, which is the XAUUSD, popularly known as the gold spot. And in fact, we have quite an interesting situation going on since the beginning of this week, as we saw some volatile movement in price action during the first couple of hours of the new week. And this could be as a result of those tensions we talked about, geopolitical tensions we talked about earlier. Now, against the backdrop of heightened expectations for a Federal Reserve rate cut and escalating geopolitical tensions between Yemeni and the Yemeni Houthis and the US, and of course the Hamas and Israel, gold prices experienced a remarkable surge this morning. And in fact, this kind of geopolitical tensions usually favors safe haven assets such as the gold. And I'm of the opinion that price action may continue to the upside. In fact, the fact that price action can break out of the $2,078 level, a level which has been the highest point for so long in this market. In fact, the breakout here is a record high. And for the fact that this could happen gives us an insight into the possibilities that buyers can still gain some momentum to push price even further than the highest level it has gotten to at the 2,143 area. Now, with the way things are going, for me, it's not a surprise that we had this strong bearish move to the downside back after hitting that new high. We do know that from a psychological point of view, that when price action gets into a new high, it usually takes some time before price action acclimatizes to that zone. And usually when price gets into such levels, we usually see the emotions of fear take over the market, as those who had bought the asset at a very cheap price may, out of fear that the price may crash from that area, start closing in some of their positions. And this usually reflects on the chart in form of retracement moves, choppy situations, consolidation phases. So to me, it's not a surprise at all when price action gets to a new high. So it usually takes some time for price to acclimatize, drop back down, gather some liquidity so that it can break out of the previous high. But the question now is, when will the next momentum begin? It may take quite a while before that happens, especially in a week that is laced with a lot of high impactful event from the United States. Now, in addition to that is the recent uptick in the U.S. Treasury bond yields. We saw in recent times, we saw a little bit of spike in that one. Now, prompting a lot of people to take some profits from their gold, from the profit they had made so far, to see and digest how this is going to play out in the nearest future. So we are still looking at how this is going to play. Then also we have this recent ongoing tensions in the Middle East as regards to and also the respiratory illness outbreak in the Chinese economy as well, which has also sustained interest in safe haven assets such as gold. So these are all factors that may likely affect the gold prices positively. Now, in as much as we have a fundamental or economical and psychological perspective into what is going on here, let's see what the chart is saying and what it reveals about the thought process of participants in this market. Now, I want to emphasize again that if you had not watched my weekend videos on the XAUUSD, please go ahead and watch those videos, as it gives you an insight into what we saw on the higher time frame that led to what you will be seeing here on the 1 hour time frame. So going back into the chart, and from a technical standpoint, we have very important levels here on the 1 hour time frame. The first one is the 2143 level, which happens to be the highest ever price action has been for the XAUUSD, which will be serving as the resistance line for this week. And then we have this area where price action started this week around the 2072 area, just right close to our key level at the 2078 area. Now, with this kind of range, it is pertinent for us to exercise patience and wait for price to either break down the support line of the range to give us an opportunity to sell, or break out of the resistance line of the range to give us an opportunity to buy. Now, if you look at what is going on right now, you will see that price action appeared to have broken down both the key level at the 2078 and of course the support line of this particular range here, to incite the possibilities that we could see sellers come in to dictate the pace going forward. Now, with the situation we have right now, let's see if the market will do a retest structure that is something like this. It could take about 2 to 3 hours before this happens. So if price comes back and we see that buyers are finding it difficult to climb back above the key level at the $2,078 area, and this of course would reflect on the chart as continued selling pressure around this area. If continued selling pressure persists like this, then we could join a bearish momentum, and if price action continues to drop to the downside, breaking down the $2,050 level, a level which interestingly shares a beautiful confluence with the support line of the ascending channel we identified on the higher time frame, will also welcome more selling opportunities. But one thing I would like to state here is that the overall outlook on this market, it remains very, very bullish. So if we sell at a retest of the structure here, if price does a retest and resumes selling pressure around this area and we drop to the downside, please note that as soon as price gets into anywhere close to both the 2050 and the support line of the ascending channel, kindly move your stop losses accordingly, as this area could still serve as a platform for buying opportunities to push price to the upside. So move your stop losses accordingly if price gets close to this area, and let's see how the market will react to that structure. And we are not going to be selling further unless price action breaks down, retests the structure to push price movement to the downside. So this is how we are going to be managing sell positions here if we see a retest of the structure. However, if price action continues to find buy pressure around this area in such a way that it breaks back above the $2,078 area, I will be looking out for buying opportunities at a site of a higher low. If that happens, I join early enough, and if it doesn't happen, I already have a buy stop order sitting above the $2,090 area where I want to be capitalizing on a bullish momentum at this particular point in time. So that is one way we are going to be drawing a bullish momentum here. And if price action goes on to break out of the $2,018 area, I want to be adding more buy positions here. So let me just mark out this level around this area, $2,018 level. So we readjust this one, 2,118. So we're also going to be having another buying opportunity if price action goes on to break out of that structure. Personally, I'm of the opinion that based on all the fundamental factors, the geopolitical tensions, and the recent pandemic in China, all this are likely going to be affecting safe haven assets, as majority will want to be moving their capital from currency assets to assets that are not currency denominated. So let's see how the market will play out around this here. I maintain a bullish bias here, but if we see certain pressure below the 2072 and 2078 area, we do want to be joining a sell move and then see how the market reacts to the 2050 area to know if we are going to be joining more selling opportunities or getting ready for another wave of bullish momentum. So let's see how the market will play out from here. Mark out these levels on your chart, and trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So we are gradually getting towards the end of the road for this session, the Monday session of the Forex Morning Mastery. And while I wait for your questions, if you have any, I will be rounding off gradually. And in fact, if you have found this content helpful and useful in making your independent trading decisions for both the London and New York session today, kindly support this project by giving the video a thumbs up. Your likes are very valuable to me, and in fact, it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them. Let's grow this community together, everyone, and thank you very much as you do so. And for those of you who had clicked on the like button, I really do appreciate you guys. Thank you very, very much. And for those of you who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And trust me, the more time you spend with us in this community, the better you get to comprehend our analytical approach and eventually be able to use the information gathered here to make your own independent trading decisions. So I look forward to seeing more of you same time tomorrow, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing and of course prepare for another trading session coming up tomorrow. So I'm not seeing any questions here, so I want to assume that we are all on the same page. Now that reminds me, I dropped the link to the XAUUSD live window. It's pinned at the top of the comment box, so you want to be clicking on that link. Click on the notify me button so you can get notified as soon as we come on live. For those who don't know, the XAUUSD live window is a platform that was born out of popular demand from this community, where we all come together to monitor real-time price action on the XAUUSD during the New York session on a daily basis. So it usually kickstarts about 5 to 10 minutes into the New York session, and it lasts between 5 to 7 hours depending on the frequency of trading activities for that day. So I look forward to seeing you guys in the comment section on that one too as well. So on this note, I want to wish us all the best of luck today. Remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So in that regard, ensure you have a well-defined risk management strategy that will help protect your portfolio so that you can be able to trade another day. So I see your comment here, Road to Freedom. You said that, so your opinion is that you still believe. Yes, I just said that. So we just wait for structures to tell us what will happen. So because of I said that doesn't mean that we are buying right away. We are still waiting for structures to mature before we jump into any positions here. So on this note, I wish us all the best of luck. Trade smart, trade consciously, and I do wish you a wonderful day. See you all in the comment section as we continue to monitor price action. Do have a wonderful evening, everyone. Bye bye.